twice in a day. What is going on, guys? Well, earlier I shared with you that the PPI inflation came out positive. We seen that inflation was coming down, a huge bullish moment. But the markets are rigged. We fell here harshly. Down here, you can see here on the hourly chart, we are now recovering, but we fell as low here in this candlestick as that 20,000 mark, 20,300. I'm going to explain exactly what happened because the markets are completely rigged. It started off with this. You guys saw me cover off the positive PPI inflation, but then look at this article shared by CoinDesk. Right? Tell me this is not rigged. Justice Department to announce major international crypto enforcement action. The department will hold a press conference at noon Eastern time. Like, they had a press release before telling us what it's about. Like, they're creating this drama. And then we find out exactly what it was, which was a bunch of nothing. Yeah, it's just come out that the US Department of Justice want to go after BITGET crypto exchange, okay? This is a Hong Kong based, and apparently they're laundering funds tied to Russia, okay? So they're nowhere to be seen for FTX. No, God forbid if they do anything useful, but suddenly these regulatory bodies want to do stuff when they're not needed. Here at BITGET, we saw what they're doing over at Genesis and DCG. What a nightmare, right? Leave them alone. Leave Gemini alone. What is going on? Why are you hindering processes? You're not there to do anything in the first place. And now you want to come in afterwards, after the fact, just to say, oh, look, this is what we're doing. Can we get some more funding, please? Useless. And that's what's causing this market to fall to the downside right now. Let's take a look at it. We are seeing the market recover a little bit here. Again, the setup of this bear flag, I want a few people to understand. These bear flags can move in either direction, okay? Now, the bearish direction did give this some indication, like I shared in my videos, that it could fall to the downside. After I saw the positive inflation data, where we recorded the video, we were sat here. Okay, and look where they released that data and threw us to the downside. Now, when you get these isolated cases, yes, it messes up your pattern, which is really annoying because you're hoping that Bitcoin could have broke to the upside. But fundamentally, you see that the support did come in from the 20,000 level. So now you need to reset. The market needs to reset, build some support, hold 20,000. And now the bears got a chance out of nowhere, right? It's like a boxer who got a lucky punch. They got one in. They got a hand by the DOJ playing games around there. And now we need to see how the bears play out. Can they take advantage of that? Because we can see there is support coming in at 20,000 for Bitcoin. But if I flip on over to this chart, next support for Bitcoin is exactly this 20,000 level, and then thereafter 18,700 at the top of the channel. The other way to look at it is look at the 4-hourly EMA ribbon. Let me bring that out for you guys, and you can see that look where we bounced exactly. We came deep into our EMA ribbon. So again, that 20,000 level is the support around the 4-hourly EMA ribbon. Let me remind you guys, let's not let the bears get too excited here. This is the chart we're working with. Okay, so any of those bears getting excited that did a little bit of red there with help from DOJ, calm down, right? Even if we get red all the way down here to the daily EMA ribbon, I'm perfectly fine. This is still an upward trend, and we're a huge way ahead of where we were before the start of the new year. So this is good news. Even if we want to trace down to this line here, that's perfectly fine. Do we want to come down to this level? Can we come down to 20,000 or even lower down to the top of the channel, 18,700? I'm happy with either of these. I'm not going to DCA too heavily at 20,000. If we fall lower into 19,000, this line here at 18,700, I'm more than happy to DCA at these kinds of points as opposed to 20,000. Now, I don't want everybody to get super excited, right? It's not about getting super excited. From a macro perspective, from a long-term perspective, things are improving, and that's very, very clear. But at the same time, we need to understand that this still relies on Jerome Powell. And remember when I kept saying over the last couple of days, the market is pricing in no room for error. And that is why I'm explaining that on the weekly chart, we still have difficult times ahead. Let's understand the dynamics of where we're in. The market is expecting a pause at the next meeting. Right? All you're seeing now is some of the market taking some chips off the table. This is not just to do with the crypto markets falling today. Wider markets are falling as well slightly, okay? Not as badly as crypto because obviously the DOG thing, which I just covered off, but 0.75% on the NASDAQ, S&P down 1%, and the Dow Jones 1.16%. So you're seeing this kind of play out where even the safer stocks are falling more than the riskier NASDAQ. Okay, partly led by the fact that Goldman Sachs produced bad earnings the other day, and we're starting to get a little bit of nervousness around how some of these earnings are going to come in. So the market's starting to take a few chips off the table heading into the next FOMC meeting because they're just a little bit unsure about what Jerome Powell is going to do, and they don't want to get too excited pricing in a pause or pricing in 25 basis points when they don't know what he's going to do. He could be throwing us into a deep recession. So that's the worry in the market's mind, and it makes complete sense. Now, when we translate that over across to crypto, that graph looks good, and it can fill a lot of people with hope here. But I want you to keep reminding yourself that once you're done with your trades, take a look at the weekly chart. Zoom out and take a look at this chart. And it's when you're on this chart that you start to understand that what we're looking at here, let me just remove some of these drawings so you guys can see it a little bit better. There you go. You're seeing that we're running into our weekly EMA ribbon. That's a lot of resistance coming in. And we need to be very, very wary of this. A lot of resistance coming in from this level. It's not just suddenly we're going to run up to 25,000 and things are good. Once we do get above 25, we get a weekly candle close, then we can start worrying about the next cycle or moving sideways and then upwards. Let's not get confused with where we're at. We're enjoying the short-term pump. Let's hope we can enjoy it. But we're running into resistance. There are still hurdles in Q1 and Q2, which we need to get through. Okay, I wanted to make this video just to make sure you guys know what's going on. Huge rigging, right? How can you have such a positive day in terms of the inflation figure coming out, and then at the same time, DOJ put out this piece on absolutely nothing? They just had to stop the crypto run, right? They just had to do something. It was such a pointless thing for them to do. You couldn't make it up, right? You just could not make it up. So there you go, guys. That's what's going on in the market. Stay safe out there. Wait for smart entries. If you're trading, do so with only money you're willing to lose. Long-term portfolio, make sure you have high conviction, stay patient, no running into things, stay away from leverage, stay away from margin, keep it all safe, keep it all rational, and you'll be able to navigate this space. Thanks for watching, guys. I'll see you in the next one.